Hey everyone, Mortgage Nerd back again. Remember, Miami Heat's in the playoffs. Yes, I am watching. Either way, I'm here to talk to you about rate forecasts. So I made a video on home price forecasts. This one's about the mortgage rate forecast. And we'll start with this first slide from Freddie Mac. So you can see the difference in the blue color. Maybe one of those is purple. Again, I'm colorblind. I do terrible with these things. But either way, you see the two shades. I see the two shades. So the projected is for rates to continue going up. But at least it's not like a sharp rise. It's not this crazy meteoric from 3 to 4 in a matter of months. No, it's more like from where it is now, which is just getting over 3 to getting to the highest 3s by the end of 2020. I think that's a really good pace for the rates to go up based on everything that's been going on. We don't want the market to completely stagnate. We don't want the market to crash because buyers went from everybody wants a property to nobody wants a property. You can't have it go that fast. It's got to be this slow tiered process. Of course, nobody controls these rates. Like the Fed doesn't control the rates. The Fed controls the adjustable rate mortgage by controlling the money supply and the adjustable rate mortgages because of that. And they're going to keep them low till 2023. So my guess is when the Fed starts raising that Fed rate, actually I don't have a guess. I have no idea what's going to happen in 2023. They could raise it and we could see mortgage rates on fixed rate mortgages come down. I've seen that before too. There's a lot of charts showing that inverse correlation. So right now we are in the low 3s and they expect it to tick up quarter by quarter, as you can see there on the bottom right. So this mortgage rate projection is not just Freddie Mac that we saw on the other slide. Now we're looking at different agencies. We have Freddie Mac and Fannie Mae. That's conventional loans. They've got economists that do forecasts and stuff. Then you have MBA, which is the Mortgage Bankers Association, and the National Association of Realtors. So two of the biggest associations in the country that have a lot of funding. So they have these economists that come in and they get their nerdy glasses on and they say, oh, this is what I predict. And then of course we have the average of all four here on the side. So let's look right now for the remaining quarters of this year. We're already deep into quarter 2. So quarter 3 and 4, still 3.3, 3.4. Mortgage Bankers Association, they're really pushing it high to 3.6, 3.7. You know, it's crazy. If we go back to the last slide, you see this tick up here is in part because of the inflation scare that we just got. We just got the news that inflation year over year went from 2.6 to 4.2. So that shows us that inflationary fears are going to continue to drive these rates up. So if we look at what the Mortgage Bankers Association is saying, they feel that already in July, August, September, which is the third quarter, we should be seeing rates over the 3.5 range. I hope that's not the case, but it's very possible. It's very possible. As it is, we've had such low rates for such a long time. If you haven't refinanced, you know what, shame on you. 50% of all mortgages are over 4%. If you're stuck in that, that's your fault. You should have refinanced. Let me take that back. It's not completely your fault. If you were affected by the pandemic and had to get a forbearance, then you couldn't refinance. But now they have other programs to help you with that. So it will be your fault if you don't refinance before this period here. So National Association of Realtors, sorry realtors, you guys don't know anything about mortgage rates, but that economist might. Either way, still rates in the 3s, I mean, historically low. And to be kind of like sitting in there and not going up quickly, I like that. I like what I see. This one shows what's actually been happening with the mortgage rates. And this is the slide that I showed you just a minute ago. I know I said go back to it, but I didn't go back because we never saw this one before. But it shows that little tick up there after rates went up and they came back down. That's what we saw. We saw, if you watch my videos, you look at my charts that I have here, mid-February, that's when rates started going up. You can see it on this chart here, around mid-February or so. Rates really started going up. And they kind of eased their way down throughout all of April. But then when we got the news on the inflation in May, that's where it jumped up again. So it's okay to see stuff like that. Just look, go back here to last year. Of course, last year's example is a little bit weird because it's also during the pandemic, this big spike here, but it's okay for us to see stuff like that. Hopefully it's just a head fake and it's just a really slow progression up, not these big steep ones, because the whole market goes crazy. It hurts people that are looking for a house and expected one rate and then got a much higher one. I prefer a slow and steady rise as we go along, and hopefully that's what we get. Make sure you hit that like button, subscribe, hit the bell, support this channel so I can keep giving you good content and information on mortgages and real estate. Mortgage Nerd out.